Remember one of those moments in life when you realized something that blew your mind? That happened to me when I actually discovered dividend investing, and when I realized that it can become my passive income source without any sort of effort at all. That's huge, right? I'm going to introduce you to two dividend stocks, high dividend stocks, and I'm not even talking about 2 or 4% dividend stocks. It's a dividend earner stocks, 7% of yield. Let's go. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe and positive. We're going to be talking about passive income by dividend investing and looking at the highest dividend yield companies out there with a 7 or 8% dividend yield. They can become your sustainable and consistent dividend source of income. But before we start, don't forget to smash that like button for YouTube algorithm so that we can spread out the knowledge to everyone else. Let's go. Usually the companies with a 7 or 8% dividend yield are not there for growth. So you're not expecting to get a lot of share price appreciation over the long term or short term period, but you can expect consistent dividends payouts, huge dividend payouts that you can use as your passive income source. That's huge. And this now becomes one of my passive income sources where I'm getting around $400 to $500 every single month from my dividend portfolio, which is huge. This is great. I'm super happy about it. I don't have to do anything, just purchase these stocks and have them in my portfolio. As long as I hold them, I'll be getting this passive income flowing into my pockets, and I'm going to be using that for whatever I want. For now, I'm actually reinvesting back all the dividends I'm getting back to the stock market so I can gain from the compound interest over the long-term period. That's my idealistic goals that I have in my mind. I'll see what's going to happen next, but I'm trying to also spread the knowledge or spread my opinion about all of this with all of you there. And the first company we're going to be looking at today is Fiera Capital Corporation. The ticker symbol is FSZ.TO. And Fiera Capital is an independent investment management firm in Canada. It is a research-driven investment firm deriving revenues from management fees, performance fees, earnings share in joint ventures and associates, and other revenues. Fiera Capital caters to institutional financial intermediaries and private wealth clients across North America and Europe, and also key partners in US, Asia, and Canada, which accounts for 80% of their revenues. The company has around $180 billion in assets under management. This is huge for a company of this size. The company is also doing a pretty good job diversifying portfolio from equity and private equity funds and going into fixed income strategies, which accounts for 45% of firm's total revenue, and equity accounts for 44%, and alternative strategies accounts for 8%. Looking at the first quarter 2021 results, adjusted net earnings rose to $37.5 million, and it's up from $20.5 million in first quarter of 2020. Fiera is well positioned to benefit from the Canadian economy, which is poised to rebound in the nearest future. With all the vaccinations are going through the roof, the Canadian economy actually lined up very nicely for the second half of 2021. We'll see what's going to happen. No crazy predictions from myself right now, but I expect the S&P 500 to rise at around 6 to 8% until the end of the year. But what I know for sure that Fiera Capital is going to pay you out dividends no matter what consistently with its crazy dividend yield of 7.7%. What can be better as getting the passive income source without doing any work on top of that? Investing in general is a pretty cool thing that needs to be taught in schools, universities, everywhere else to everyone. I hope this is going to happen one day and everyone's going to be involved with it so people can safely build up their wealth on their own. Let's take a look at Fiera metrics. So the market cap right now is around $1.1 billion, which is huge for a company of this size and what they're actually doing to sustain their dividend payments and actually how fast they're growing over time. Their current dividend yield is around 7.73% and their 5-year average dividend yield is actually at 6.64%, which means that the stock price, the share price right now is probably a little undervalued, which means also that it's probably a good time right now to invest in this company and get this high dividend yield into your pocket. Their drip amount is actually very affordable for everyone. you only need to invest around $1,750 in order to get enough dividends back so you can purchase another share of Fiera capital. And this is great. This is the way how you can build up compound growth for your dividends over time. And again, this is the company that can bring you a lot of dividends back, but not necessarily a lot of growth. So if you're looking for growth stocks, not dividend earner stocks, you need to look elsewhere. I actually have a video about those, so you can check it out. But right now, because I'm focusing on stocks that can bring you sustainable, huge dividends back, that's what we're looking at. And the second company for today is going to be Chemtrade Logistics Income Fund. The ticker symbol is CHE-UN.TO. Chemtrade is an Ontario-based income fund that offers industrial chemicals and services in North and South America. And the share price actually climbed around 18% only in 2021 alone. And since that 2020, it actually rose around 25%. And this is actually pretty crazy to see, because this is, first of all, a dividend earner stock. It's not a growth stock, but we can also see the share price appreciation over the last 2 years. It's probably nonsense, but would be nice if you invested a year ago. Yes. The company enjoys a significant market share in its niche of specialty chemicals. And because the company has a very diverse product portfolio, and they also are in all the different geographies, and this becomes its strength, right? And the company also has a pretty long history of company acquisitions, so this is another source of their income and how they can actually grow their business by acquiring and buying other companies, which is pretty good to see. And as an investor, you can also understand the way their business is structured, so that you can also get all those dividends back, and you can see that they can sustain this dividend consistently over a long-term period. And the dividend yield is actually pretty crazy. I don't think I actually invested in something like this before. It's at 8.9%, which is crazy. This is a 9% dividend yield from your investments. Where else you can get this? So it's pretty much the safest way to invest and get consistent, stable dividend of 9% every single year. Wow. It's also because the price is at this point right now, they actually 5-year average dividend yield around 10.5%, so they used to be even higher than they are right now. Now let's take a look quickly at their metrics and see what the company is all about. So their market cap is around $700 million, so the company is pretty big, not huge, but still can sustain their dividends. And also, as I said before, they actually have a significant market share in their own niche, right? Their current dividend yield is 8.9%, and their 5-year average dividend yield is actually at 10.37%. So it means the share price probably right now a little overpriced, maybe, or the company is actually growing because they're in recovery mode from all the pandemics happened last year. Who knows? Another good point for them is that DRIP is super low, is at $950. So if you invest $950 in a company like this, or in this company actually, then you can get enough dividends back to actually purchase another share of this company back. So this is probably one of the best investments you can make to get this passive income source to you. Remember also to diversify your portfolio, not only invest in the dividend earners companies or only in these two companies, right? You can also, or you have to also have core dividend ETFs in your portfolio and other stocks, if you're into stocks, growth stocks, other blue chip stocks, blue chip dividend stocks in your portfolio as well, right? But these two are actually very good right now for those who are seeking to get this passive income from their dividends. Let me know what you think about this too, and if you have in your portfolio, or what other high dividend stocks you have on your mind, on your watch list, and let me know in comments. With all that, don't forget to smash that like button, subscribe to my channel, hit the bell for YouTube algorithm to do their work, and I'll see you around. Keep investing and get your dividends back. I'll see you around. Cheers, bye.